Here's the big question. Should you invest in gold or silver, or maybe both? I mean, why pick just one shiny metal when you could diversify, right? The truth is, there's no one-size-fits-all. But today, we're diving into the nitty-gritty of gold versus silver, two of the world's most ancient, most famous, and let's face it, most glamorous investments. Gold has been the favorite for a long time. We're talking about thousands of years of people relying on it as a store of value. But silver? It's often overlooked, even though it has a lot going for it too. And hey, with gold hitting all-time highs and silver facing some interesting production challenges, choosing the right one for your portfolio might feel like choosing between a luxury sedan and a sports car. Stick with me through the video, and I'll break it down for you. No fluff, just real data, examples, and all the details you need to decide which precious metal might be your next best investment. By the end of this, you'll know exactly where to place your money, and how to play your cards with both. Okay, so gold and silver aren't just pretty objects to look at, they've been used as currency for over 5,000 years. That's right, people were trading gold coins and silver bars back when ancient civilizations like the Mesopotamians and Romans were in power. These metals have had some serious staying power. In fact, gold's been around so long that it almost feels like the metal was always meant to symbolize wealth. Now let's talk prices, because this is where the rubber meets the road. Right now, gold is sitting at around $2,983 per ounce, and silver is around $33 per ounce. So it's clear, gold has always been the heavy hitter, but just because silver costs less doesn't mean it's less valuable. These two metals each have their own roles in today's market, and we're about to see how. Let's go back to the basics for a second. Both gold and silver have always been considered monetary metals, meaning they were once, and still are, used as money. Even today, many governments still mint gold and silver coins as legal tender. And let's face it, when things hit the fan economically, gold and silver are the first places many people turn. Now let's dive into silver's role in the industrial world. Silver isn't just sitting around waiting to be used in jewelry or as money. In fact, 50% of silver's demand comes from industrial uses like electronics, solar panels, and even medical devices. It's in smartphones, computers, and batteries, you name it, silver's probably in it. And don't forget solar power. Silver is essential in solar panel manufacturing, which makes it a crucial part of the green energy revolution. Gold, on the other hand, has about 10% of its demand tied to industrial uses. Most of gold's demand is based on its role as a store of value in jewelry. While gold is used in some electronics and medical devices, it's just not as deeply integrated into industry as silver. So, if you're investing in silver, you're betting on industry. And there's a lot of momentum there. But here's where the rubber meets the road: volatility. If you're looking for a stable, low-risk investment, gold is probably your better bet. Gold's price tends to be less volatile than silver. This makes it a safer investment, especially if you're looking for something to preserve your wealth over time. Gold is like your luxury sedan. It'll get you there in comfort, but it won't be doing any crazy maneuvers. Silver, though, is more like the sports car of precious metals. Fast, exciting, and a bit wild. Silver prices are way more volatile than gold. Why? Because it's not just used for investment, it's heavily influenced by industrial demand. So when the economy booms and companies need silver to produce electronics or solar panels, the price can skyrocket. But when demand falls off, silver can crash just as quickly. Silver's wild price swings are definitely a risk. But they also mean there's potential for big rewards if you time it right. Silver, though, is more like the sports car of precious metals. Fast, exciting, and a bit wild. Silver prices are way more volatile than gold. Why? Because it's not just used for investment, it's heavily influenced by industrial demand. So when the economy booms and companies need silver to produce electronics or solar panels, the price can skyrocket. But when demand falls off, silver can crash just as quickly. Silver's wild price swings are definitely a risk. But they also mean there's potential for big rewards if you time it right. Take a look at silver's price history. Back in 2011, silver soared to nearly $50 per ounce, only to drop below $20 per ounce in the years that followed. Meanwhile, gold hit an all-time high in 2021, breaking $2,000 per ounce before dipping a bit. You can see the difference. Gold has fewer dramatic price swings. So if you're someone who likes steady growth, gold might be more your speed. Let's talk storage costs, because this is where things get tricky. Gold is dense and small, so you don't need much space to store it. A small safe will do the trick. But silver, on the other hand, is much bulkier. To store $100,000 in silver, you'd need a giant safe, and that means higher storage and insurance costs. Plus, silver doesn't hold its value quite like gold, so it's a bit more of a hassle to store safely. It's a bit like this. If you were to put $100,000 in gold, it'd fit in your backpack. But $100,000 in silver? You might need a moving truck, okay? I'm exaggerating a little, but you get the point. So if you're looking to store a lot of precious metal, keep in mind that silver's going to take up a lot more space. When it comes to taxes, here's a little nugget of wisdom for you. Gold usually gets treated better than silver. In many countries, gold is taxed at lower rates compared to silver, especially if it's considered a long-term investment. In the United States, gold is typically taxed at the capital gains tax rate if held for over a year, which is often lower than the tax rates on silver. But silver can sometimes be treated as a collectible and taxed at higher rates in some places. This can affect your returns, so make sure to check your local tax laws before diving into silver or gold. In the United States, for example, the IRS treats silver coins differently than gold when it comes to tax treatment. Gold often enjoys more favorable tax treatment, which is something to keep in mind. So, after everything we've covered, which one should you invest in? The answer isn't straightforward, but it boils down to what kind of investor you are. If you're more about stability and want something that holds its value over the long term, gold is your safest bet. It's less volatile and tends to perform well when the economy gets shaky. On the other hand, if you're looking for higher potential growth and are okay with some wild price swings, silver might be the way to go. The industrial demand for silver is growing, and with the right timing, you could see significant returns. But remember, silver can get pretty volatile, so don't expect smooth sailing. A little gold for stability and some silver for growth could be the perfect mix. They both play important roles, and having a bit of each could help hedge against inflation and economic uncertainty. You also might want to look into ETFs like the Spider Gold Trust, GLD, which tracks the price of gold, or the iShares Silver Trust, SLV, for exposure to silver without having to physically hold the metal. These can be good ways to invest in both metals without worrying about the storage and security hassles. Both metals are long-term investments, so whatever your choice, remember to hold for the long haul and let the market work for you. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.